everyone. Stocks trading, well, lower right now, just after the opening bell. Mixed, as the NASDAQ says, hold my beer here, flat, just barely to the upside. The Dow and the S&P 500, though, in the red. This comes after a historic milestone. At the end of Friday's trading session, the S&P 500 closing above 5,000 for the first time ever. Optimism as well around tomorrow's CPI print might keep market momentum strong. For more on this, we've got Ben Emons, who is the NewEdge Wealth Portfolio Manager. Great to have you here in studio with us, as always, Ben. One of the huge things that we've been tracking within this market is just trying to figure out whether or not this momentum can continue at this juncture and what it would take.
Yeah, the CPI will be a catalyst for that momentum because everybody's looking at these rate cuts, and we've taken back some of those. We're about 7 priced in, we're about now a little bit more 4. There's a lot of expectation that the Fed can move, but they are in a rush. Yet we're reaching record highs, so I think the rate cut needs to stay alive in order for that momentum to keep going. So it's interesting to see these small caps today outperforming for the first time. A lot of people talk about rotation, that it wasn't happening this year, and yes, the Russell has lagged the Max 7 and the tech index quite significantly. So the CPI could be a catalyst for that change perhaps, because if CPI continues to moderate, economic growth will be really supportive, and that, I think, will boost the rotation to the small caps.
So do you think this takes recession fears off the table, especially when you look at the performance right now?
I think they're completely off the table already like several months now. I would even make the case that the econ bear, so to speak, has just been plainly wrong for more than a year, because what we're really dealing with is an inflation rate that was, excessive, but the fact that enough tightening put in the system to get inflation nicely, gently down. We're getting a little bit help from China too, by the way, that are in deflation for now. And so recession would have only happened if we're getting a major collapse in prices. That doesn't seem to be going on. So this is the soft landing, if you will, or the no landing. And hence, I think the breathing room for small caps here. Yeah.
Ben, Federal Reserve Chair Jerome Powell is expected to keep rates steady in March. Earlier today, I actually had the opportunity to catch up with Steve Pagliuca, Bain Capital Senior Advisor. Here's what he had to say about the central bank's path towards potential rate cuts this year, and then we'll get your reaction on the other side.
There's some over-exuberance around cuts, and people have seen lower interest rates. But again, I think if they look at history, that's an anomaly.
And so with that in mind here, the market's anticipation that the Fed will cut and that we're pricing this in way too early, perhaps, versus the higher for longer for an extended period of time, more so than we thought was possible. I mean, what does that even do to the portfolio positioning that people should be considering at this juncture?
Yeah, it's the economy, and I think it is still speaking to that cash, as we talked the last time, in the trash. Yeah. You could put it somewhat in the trash, but maybe not entirely. Secondly, higher for longer rates does mean a stronger economy. It would, otherwise we would not have those higher rates. We would really go back to where we came from pre-pandemic, of a sluggish economy. I don't know what will happen as of January 2025 with the new president in the White House and how all policy is going to change and what the economy is going to do. But I think this year will be much about, yes, you could expect this Fed to stay somewhat higher for longer, really because of better economy. Otherwise, I think the Fed will be moving much quicker to rate cuts. Can they cut rates? They can, but in their thinking it's about the rate is here and the inflation rate is to continue to decline. There's some room, but by calculations, that room is not much. I think last week was an important signal from the Fed, several of them, that they're not looking at 3 cuts, but perhaps more like 2. I think that's what's in the market's mind now.
And so, Ben, when you look at what helped us get to this point with the S&P 500, looking at the Mag 7 here, when you have so much of it concentrated on these stocks, we're starting to see a little bit of the broadening out here. But how much is now going to depend on that broadening out?
Yeah, how Max 7 will actually moderate from here, really, right? Because it is really unbelievable what's happening. I mean, during the Super Bowl, they had the ads for the Copilot from Microsoft Office, and I immediately plugged that in. I thought, hey, this is fantastic, right? And I think this is that momentum in these stocks is about the investments are made in AI. There's a huge amount of capital expenditure going on or planned, and that's really driving the momentum of those stocks. So is that narrative going to change? Are people going to say, okay, that's all now in the price, let's look at value elsewhere? And I think this is the bit of the juncture in currently. So it's not only about rate cuts, it's also about the story of how AI develops itself over this year. It's a phenomenal story, but it should at some point kind of be priced in and taken back.
All right, since you mentioned the Super Bowl and Vegas, we got to talk about what you'd mentioned to us earlier and sent to us in your notes. Swift in Vegas stays in Vegas was the title of it. And you've got the Swifties stock basket, if you will. Who are they?
Yeah, it's amazing that people have looked at it. IMAX and AMC or AT&T and Spotify are companies that are directly linked to the business dealings of Taylor Swift. Like it has to do with her concert rights and that type of thing. That basket is on fire, and it literally is taking off like a rocket. If you plot a GDP now against that, you see the same trend. So I've been a bit of the view of that Taylor Swift, great music, but she has an economic impact. It's been recognized even within the Fed to an extent. If you think what happened yesterday, 300,000 people flocking into Vegas and everything that happened there, I would think that some of this will have an impact on GDP. So there's estimates out on that. It could be in the billions of dollars. It's not insignificant. So the Swifties are there. The idea of that she's having an impact also on people's choices, right? That people look at her clothes, not at the jersey of her boyfriend. These are, I think, real things.
Yeah, well, his jersey sales spiked too, so he's a secondary beneficiary, I suppose. But at the end of this has been amazing to watch, and of course, the conclusion of the NFL season yesterday. Ben, thanks so much for taking the time here on the day. As we were saying off camera, Swift and Usher, they won the Super Bowl.
Indeed.
Ben Emons, thanks so much for taking the time.